Welcome to SS2 Accounting. Today we study public sector financial management, how the Nigerian government plans, allocates, controls, and accounts for public money. Effective public financial management, PFM, is essential for development, accountability, and preventing corruption. Nigeria has been reforming its PFM system under the BECE platform. The government budget is the key PFM tool. Budget cycle in Nigeria. 1. Budget preparation. MDAs, ministries, departments, agencies, submit estimates. Ministry of Finance/Budget Office consolidates. President presents appropriation bill to NESS. 2. Budget approval. National Assembly debates, amends, and passes Appropriation Act. 3. Budget execution. Warrants issued. MDAs spend within their votes. Accountant General disburses from CRF. 4. Budget monitoring. Budget Office monitors performance. MDAs submit monthly reports. 5. Audit and accountability. Auditor General audits all accounts, reports submitted to National Assembly. The CRF is established by Section 80 of the 1999 Constitution of Nigeria. All government revenues must be paid into the CRF. Withdrawals require appropriation by the National Assembly for recurrent and capital expenditure. Charge on the CRF for constitutional expenditure like public debt service, Auditor General salary. No funds may be withdrawn except as authorized by law. This prevents misappropriation. The Federation account is different from the CRF. It is the pool into which all federally collected revenues, oil revenue, customs, company income tax, etc., are paid before being shared among the three tiers of government. Federal government, 52.68%. 36 state governments, 26.72%. 774 local government councils, 20.60%. Percentages subject to FAEC decisions. The FAEC, or Federation Account Allocation Committee, meets monthly to share revenues. Key mechanisms for controlling public expenditure. 1. Appropriation limit. MDAs cannot spend more than their approved vote book track spending. 2. Warrant system. Funds released only after a formal warrant is issued by the Finance Minister. 3. PIE payment audit. In some systems, the Accountant General checks requests before payment. 4. Internal audit. MDAs maintain internal audit units to review transactions before payment. 5. Treasury single account. TSA. All government revenues consolidated in a single CBN account, prevents revenue diversion and idle balances in commercial banks, introduced 2015. 6. BECE. Government Integrated Financial Management Information System, an electronic platform that automates budget, procurement, payment, and reporting. Sources of Nigerian government revenue. Oil revenue. Crude oil sales. Petroleum profit tax, PPT. Royalties. Non-oil revenue. Company income tax, CIT 30% for large companies. Value-added tax, VAT currently 7.5%. Customs and excise duties. Personal income tax, PAYE. Levies, fines, licenses. Federal government borrowing. Domestic, federal government bonds, FGN bonds, treasury bills. External, World Bank, IMF, Eurobonds, bilateral loans. The Public Accounts Committee, PAC, of the National Assembly, House of Representatives, receives the Auditor General's report and examines government accounts to identify areas of waste, fraud, and misappropriation. Question accounting officers. Recommend remedial action. PAC is a key accountability mechanism in Nigeria's democracy. Summary of public sector financial management. Budget cycle, preparation, approval, execution, monitoring, audit. CRF, main government account, withdrawals need Appropriation Act or constitutional charge. Federation account, shared monthly via FAEC among FGN, 53%, states, 27%, LGAs, 21%. expenditure controls, appropriation limit, warrant system, internal audit, TSA, GIFMIS. Revenue sources, oil or PPT, royalties, crude sales, and non-oil or CIT 30%, VAT 7.5%, customs. PAC, National Assembly Committee that reviews Auditor General reports.